Carnage in financial markets as fears of recession loom. Residential rents hit record highs, and the federal government tries to downplay the energy crisis just as the regulator warns of the potential for more blackouts. It's Wednesday, the 15th of June, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. I tell you what, after that introduction, this is not exactly an upbeat podcast this morning. Wow, talk about bad news, financial markets, residential rents, blackouts. Wow.
Yeah, and yesterday in particular was just an extraordinary day to watch, wasn't it?
It sure was. And the market, it fell so hard and then it tried to come back and couldn't. We had the government out talking down the prospects of blackouts and the regulator coming out and sort of saying the opposite. It was quite an amazing day yesterday to be a bit of a news hound, which both you and I are.
Yeah, absolutely. So there's plenty to discuss this morning. And immediately after the show, you've got a chat with Brian Hartzer, who is the former CEO of Westpac and now the founder of 2B, which is numeral 2, letter B-E, which is a business that wants to formalise the bank of mum and dad. A really interesting concept and a great chat, but we'll get to that a bit later on. So much to talk about, as I mentioned, Sean. There was really nowhere to hide for investors yesterday. Major sell-off across several asset classes, which meant there were plenty of people losing plenty of money.
There were just very few investments yesterday which didn't suffer. Equities tumbled, bonds, traditionally a safe haven, also got sold off, cryptos tumbled, while the Aussie dollar fell back below 70 US cents. About the only positive place for investors yesterday was a bank account. The reason for all this carnage is fears of a recession in the US and other economies, including Australia. Inflation is out of control in many economies. In fact, it's at a 40-year high in the US, for example. The fear is that central banks around the world will have to sharply hike interest rates, including in Australia, and we saw that last week. They need to do that to slow economies fast, to get on top of inflation. Rates will rise so much that economies will head into recession. That's the fear. And that sentiment, the fear of recession, is driving markets.
And Sean, it's probably a very good time just to remind everyone that we are obviously not an investment podcast, and we certainly recommend that people speak to a financial advisor before making any investment decisions. And now is a pretty good time to have those conversations.
Yeah, absolutely. Now, when there is so much uncertainty, give your financial advisor a ring. And if you don't have one, find one.
Yeah, absolutely. All right, let's start with equities. What happened on the local market yesterday?
Well, the S&P ASX 200 closed the day down 3.55% to 6,686 points, though at one stage was down nearly 5%. It was the biggest one-day sell-off since March 2020. Of course, that's when the pandemic hit. About $82 billion in value was lost from the market. At one point, it was over $100 billion in value. Energy, technology and material stocks led the way, but there wasn't a sector that didn't get hit hard. In fact, telcos were the best performers. They dropped only 1.7%. All the banks suffered. Commonwealth Bank dropped more than 3%. National Australia Bank and Westpac both fell around 4%, and ANZ was off nearly 5%. Iron ore prices fell on concerns about a slowdown in steelmaking in China. That added to the general malaise, and BHP and Rio Tinto finished down around 5%, while Fortescue Metals tumbled more than 8%. Woodside Energy was down nearly 6%, while Santos fell more than 5%. The travel companies were hammered. Webjet fell nearly 9%, while corporate travel management and Qantas dropped 7%. Buy now, pay later group Zipco was the worst on the bourse. Rising interest rates are likely to trigger more bad debts, and the buy now, pay later sector is not popular at the moment. Zipco reached more than $12 in February last year, and yesterday, after falling another 15%, it closed at 53.5 cents a share. Quite amazing. There are only a handful of companies that didn't go backwards yesterday, Michael, including Computershare, Domino's Pizza and Incitec Pivot. Really an amazing day on the ASX.
Yeah, it sure was. Now, Sean, bond markets are supposed to offer a safe haven when equities are being sold off.
Yes, but not right now. Fears of much higher interest rates hurt bonds because their returns are fixed. So getting a 3 or 4% return when interest rates are rising doesn't look that attractive. So people are getting out of them. That in turn is pushing up bond yields, and the Australian benchmark 10-year yield jumped by as much as 33 basis points yesterday to just over 4%. That's the biggest one-day jump since 2008. Now, bond markets are supposed to be great predictors of future interest rates. In fact, that's exactly what drives them. If that's true, our mortgage rates are going to be much, much higher in 12 months' time.
And what about international markets?
Well, Wall Street has had several sessions of bad news, and investors are waiting to see what the US Federal Reserve does over the next couple of days. Tomorrow morning, that's Thursday morning Australian time, we should know by how much the world's most important central bank will lift interest rates. At least that will give some certainty to markets, even if it is a 75 basis point increase.
And Sean, you mentioned the Aussie dollar is back below 70 US cents.
It's currently around 69.5 US cents, a little bit above that perhaps, but that's more to do with the strength in the greenback. In times of uncertainty, investors flock to US dollar investments, and that's created massive demand for that currency. In fact, the US dollar hit a 20-year high yesterday against a bunch of other currencies. By comparison, the Aussie dollar actually isn't looking too bad.
And Sean, we talked yesterday about cryptocurrencies, which were already having a pretty bad time of it. And this is before all the turmoil yesterday. What's happening in the crypto space?
Well, it's just gotten worse. The slide in cryptocurrencies continued over the past 24 hours, with Bitcoin tumbling below 21,000 US dollars a unit. Other tokens, including Ether and Avalanche, also took a tumble. The global market for cryptos is estimated to have fallen below $1 trillion US dollars. Now, digital currencies have lost favour as interest rates have risen. Crypto lender Celsius, one of the biggest marketplaces, froze withdrawals earlier this week. That put the cat amongst the pigeons, putting a lot of pressure on all digital units. That is a market that isn't quite sure where to go next.
All right, big start to the show and a massive 24 hours. We'll be back in a moment with the rest of the day's business news. Sean, residential rents have jumped to record levels across most capitals in the past 12 months as strong demand outpaces supply.
Yes, in fact, in some suburbs, such as Docklands and Southbank in Melbourne, prices are up nearly 30%, according to CoreLogic. And there's little relief in sight, given immigration will pick up during the rest of this year, adding to demand. Unit rents are likely to rise faster than house rents because of affordability factors, according to CoreLogic. Now, in the past 12 months, rents across Sydney, Perth, Canberra and Hobart rose by about 9%. Brisbane was at 12%. Adelaide at 10% and Melbourne at 7%.
Sean, Prime Minister Anthony Albanese says China must remove its sanctions on Australian exports before the relationship between the two countries can improve.
Yes, he was commenting after the defence chiefs from both countries met over the weekend. That was the first high-level chat in more than 2 years. Mr Albanese said it was China that imposed sanctions and it's China that has changed and it's China that needs to remove the sanctions. He said that Australia wants to trade with China in a way that benefits both countries.
And counting in the federal election more than 3 weeks ago is slowly winding up. A big development yesterday, though. One of the new senators is former rugby great David Pocock.
Yes, best player I have ever seen play for Australia, David Pocock. Quite an incredible, energetic individual, and post-rugby life has become a real activist, a real environmentalist. He became the ACT's first ever independent senator yesterday, and he'll join Labor's Katie Gallagher as the territory's 2 representatives. In the House of Representatives, Labor, in the end, won 77 seats, though former New South Wales Minister and Liberal candidate for the seat of Gilmore, Andrew Constance, has requested a recount. After preferences, Labor's Fiona Phillips finished up with a 373-vote margin over Mr Constance. Assuming that remains, Labor will end up with 77 seats. The Liberal National Coalition will end up with 58 seats, the Greens 4, 1 each from the Centre Alliance and Katter's Australian Party, and of course 10 independents.
373 votes. There's not much in that, is there?
No, it's such a small margin of error. It is interesting though, by this point of the count, most votes have been counted at least 2, probably 3 times. So generally recounts don't end up changing the result. Now, I've got to thank Anthony Green from the ABC for that. He was filling me in on that just a week ago. Not personally, he was on the radio, but I was listening.
He is fantastic, isn't he? He knows everything there is to know about the Australian election system.
Oh, he's spectacular.
And Sean, Energy Minister Chris Bowen was confident yesterday that the East Coast could avoid blackouts.
The Australian energy market operator has used emergency powers to force generators to pump more electricity into the network over the past 48 hours to avoid supply shortfalls in New South Wales and Queensland. Now, households in the states were being asked to conserve energy, and Mr. Bowen was confident that there wouldn't be blackouts. However, the regulator late yesterday afternoon came out and warned of potential blackouts in Queensland and New South Wales. Really quite incredible market at the moment. Caps for wholesale electricity prices remain in place in Queensland, New South Wales, Victoria and South Australia, but the federal legislation allows for cost recovery by generators that are creating unprofitable electricity. As we mentioned yesterday, there's a demand-supply imbalance. Plenty of demand due to the cold snap down the East Coast and reduced supply due to breakdowns and maintenance at power stations.
Sean, I find this next one pretty interesting. We've got all the bad news in financial markets, yet businesses remain pretty confident.
Yes, they do. The latest National Australia Bank Business Confidence Survey suggests economic momentum continued into June. While both gauges of confidence and operating conditions weakened a touch, both actually remain relatively strong. National Australia Bank Chief Economist Alan Oster said confidence is still fairly robust, all things considered.
The Star Entertainment Group, which we have talked an awful lot about, Sean, has provided its final submission to the New South Wales review into whether it's suitable to hold a casino licence, and in doing so has asked the inquiry to recognise the changes made at the group.
And there's certainly been quite a few of those changes. The submission highlights the changes in management and operational reforms, while lawyers for the casino conceded it was open for the New South Wales review to conclude that Star wasn't suitable for a licence when the inquiry began late last year. Things have changed, the lawyer said, and the group should keep its licence. Some of the former practices, including the China Union Pay Scheme that disguised funds that high rollers used to gamble as hotel expenses and avoided regulations, have been closed down. Hence, the Star should keep its licence. But Michael, even if the Star gets through this inquiry, Queensland has just announced an independent review to investigate whether the group is suitable to run casinos in Brisbane and the Gold Coast.
Sean, we seem to talk a lot about transport, different types of transport. We both have a fondness for planes and aircraft of all kinds, and we talked about trains last week, and we've talked about boats and cruising and ships and everything. I don't think we've ever really discussed buses that much on Fear and Greed. Today,
this is a great little story, though.
It's a ripper of a story, isn't it? And so this is about Australia's biggest bus operator bidding to take over the company that runs, get this, London's iconic double-decker buses. How good is that?
I agree. Kinetic Group is part of a consortium that's made a $1 billion bid for Britain's Go-Ahead Group. According to the Financial Review, Kinetic already owns buses in Australia and New Zealand, including Melbourne's Skybus service in from the airport, and if successful, will add fleets in the UK, Ireland and Singapore. It'll also add rail services in the UK, Norway and Germany. The double-decker buses, though, that's a standout for me, Michael. Wouldn't you agree?
That is pretty good. But I'm adding it to the list. We've got buses now. If you can find a story about hovercrafts or monorails.
Monorails. Do we still have those?
Not many. Obviously, the one in Sydney disappeared a few years ago. I think there's still one at SeaWorld.
Oh, possibly. I don't know. My children are too old to go to SeaWorld.
You know how you're always getting homework to go off and do? Maybe that can be my homework. I'm going to find out where we still have monorails operating in Australia. That's my job.
Excellent.
All right, moving on. The corporate regulator has warned fund managers and super funds to ensure their promotional materials for investment products don't over-egg their green credentials.
Greenwashing is something we're all going to hear plenty about in coming years. It describes investments that aren't quite as environmentally friendly as they're made out to be. The Australian Securities and Investments Commission said a review of investment products had found some areas for improvement. The regulator has provided an information sheet, and it said it expects product issuers to review their practices against that information sheet. Certainly, we as investors want to know that funds are telling the truth.
Yeah, absolutely. And one more, Sean. The US Defense Department has signed a $120 million deal with Lynas Rare Earths to build the country's first commercial rare earth separation facility.
A bit of a coup for Lynas, this one. Rare earths aren't particularly rare, and they're used in electric vehicles, wind turbines and consumer electronics, but they are very difficult to separate. Most separation is done in China. In fact, more than 90% of rare earths are separated in China. Under this deal, Lynas will mine the rare earths in Australia, ship them to the US, where the separation, the processing will take place. It follows a 2-year pilot scheme run by Lynas, but this is certainly a big hand up from the US government.
All right, moving on to overseas news, and the second hearing into the riot on Capitol Hill in Washington back in January of last year was as entertaining as the first, held last week. There was plenty of discussion about how Donald Trump simply refused to believe that he lost the 2020 election to Joe Biden.
That's right. Mr. Trump was repeatedly told by advisors that he lost the election, but continued to make claims of voter fraud. Now, that's according to former Attorney General Bill Barr. Mr. Barr said the former president had become detached from reality. Numerous people within Trump's inner circle told him there was no evidence of fraud, and he chose to ignore them. The committee also heard that on the night of the election, an allegedly drunk Rudy Giuliani, ally of Trump, of course, told the president to just claim he won.
Wow, extraordinary. Now, Sean, we mentioned yesterday the incredible sums of money being offered for the broadcast rights of the Indian Premier League, which is, of course, the annual T20 event that's become the biggest cricket event in the world, at least in terms of viewers.
Yes, and now we have a winner. Disney has won the television broadcast rights for the next 5 years, paying around $3 billion according to media reports. The streaming rights went to Viacom18, which is a joint venture between Reliance Industries, which is a massive Indian company, Paramount, the Hollywood group, and a James Murdoch investor group. That one went for about $2.5 billion. So where's that at? $5.5 billion. What's interesting is that broadcast went for more than streaming. Most people in India watch the cricket on free-to-air rather than streaming, which is why that costs more, though that is likely to change in coming years.
Yeah, and finally, Sean, just sticking on the big money theme, the 500 wealthiest people have lost a combined $1.4 trillion this year.
Yes, including more than $200 billion on Monday, thanks to the incredible sell-off on Wall Street. The names, of course, are familiar: Elon Musk, Jeff Bezos, Mark Zuckerberg, Bernard Arnault. They all led the way, and that's according to Bloomberg's Billionaires Index. The local billionaires to have lost a fair chunk of money include iron ore magnates Gina Rinehart and Andrew Forrest, and the Atlassian bosses Mike Cannon-Brookes and Scott Farquhar.
It really is just bad news all round today, isn't it?
It is. It's just a miserable day.
Oh, yeah, really. And ending with such a massive loss of money for the 500 wealthiest people, that is just an extraordinary story. The whole day is extraordinary. And that's my most overused word today, extraordinary.
Extraordinary. Mind you, we've got a great interview coming up with Brian Hartzer. Now, Brian Hartzer is not a negative person. He's always upbeat.
He certainly is. Look, it's a great chat. It is all about kind of the bank of mum and dad and whether that is kind of the future of lending. Sean, it's an extraordinary interview.
It is, and it's clear to see that Brian has children who are looking for homes, because he ran Westpac, and very, very successful banker in his own right. Since stepping down from that role, he kind of had a long period where he didn't do a lot. Now he started to be with one of his former colleagues from ANZ, and he's very excited about the prospects of creating a new lender in the market.
Yeah, that's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 15th of June, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. And why not have a go at listening to us through your smart speaker as well? All you need to do is say, play the Fear and Greed podcast, and away you go. I'm Michael Thompson, and that was Fear and Greed. Have a great day.